board, Sanjay Shah, CMD at Prudent Corporate, to talk about how their quarterly performance has been. Sanjay, hi, morning. Let's talk about how growth has been for you, because your equity AUM is up a good 25%, but equity net sales actually dipped 5% in the quarter gone by. Tell me, is the retail appetite hitting a temporary ceiling, or are your distributors facing tougher competition? What is it?
Good morning. To be very frank, let me tell you that my January has been the best month ever in the history of Prudent. We did the highest gross sales, highest net sales, and the highest SIP addition. So I can tell you frankly, on the ground level, I think we do not find any significant fatigue. And even though market has been in the range bound for last about 12-18 months, if you look at, because of the power of compounding, the retail investors, where we represent them significantly, my almost 50% or more than 50% flows come through SIP, and the all SIP investor has made in last 12 months or even 18 months more than 6, 7, 8% return on their portfolio. So to be very frank, if you compare the mutual fund investors versus those who are investing directly, I can tell you the experience of retail investors who are owning the equity directly. I think their portfolios are in deep red because of significant correction in what you call the small and mid cap and the micro cap stocks. So I think to summarize, the mutual fund investors are reasonably in comfort zone as far as investment is concerned.
The market turn out the way it is, or do you sense that the problem could aggravate, at least when it comes to the mid and small caps?
I don't think, because if you look at in last 6-8 months, we have seen that the new money, which is by way of lump sum coming into mid and small cap, has definitely tapered down, which used to be almost about 25-30% before a year or so. Now the lump sum money has came down to about 10%, and definitely the SIP, which is very long term in nature. So the SIP flow is still 1/3 of my SIP book, but the lump sum has came down to almost 10%. So I think that itself shows that people are not greedy to still continue to invest into mid and small cap. That shows that probably my belief is that mid and small cap correction might be closer to an over, probably because now people are not in that kind of greed kind of situation that where they want to just buy mid and small cap. So I don't see a significant correction to continue as far as mid and small cap is concerned. If you listen the commentary of a lot of fund houses, now they are saying that mid and small cap has specifically came into a zone where you can start looking at it again in your allocation.
Interesting. Okay, Sanjay, if I can shift the tilt towards gold and silver, because when we were looking at the ETF or the data with regard to the cash segment for the month of January, we've seen a huge spike versus December in terms of the way silver ETFs have been traded. It's been the single largest trade at play in the cash market in January of 2026. Talk to us about what's playing out, where those trends are concerned with regard to your AUM. Are you seeing a very strong fervor, and what exactly are you advising clients, customers, as well as agents on what to do with regard to gold and silver?
No, so you are absolutely right. As far as our advice is concerned, I can tell you that from beginning, we always said that gold and probably silver was never a part of strong advice before a year or so. But then gold has been always recommended as a strong product in your basket because it's a strong inflation hedge, and you always have an advantage of rupee getting depreciated over a period of time. So we always maintain our advice that at least have 10% allocation to gold in your portfolio as a long-term allocator. However, you are right that last month we have seen disproportionate demand for investing into gold and silver, and probably that was the month where we have seen the significant correction in silver. In the current month, we have seen the demand is tapering down. So I don't see, but then I can tell you frankly, at my level, if my AUM is 1,31,000 crore, my commodity FOF is hardly about 1,200 to 1,500 crore. So it's about 1%. So it's not that disproportionate money has gone into gold and silver, but then whatever has gone only in last 6-7 months. So probably people has bought at the last leg of rally. Whether this rally will continue or not, only time will tell. But you are right, there is some amount of demand for gold and silver. People have been inquiring about the other commodities also, to invest in copper, to invest in other commodity-led product. And fortunately, it's not available. Otherwise, people would have started buying that also.
Right. Sanjay, I also want to understand, just, looking at your quarterly performance, while there's been a top line growth definitely of about 20%, your EBITDA margins have compressed about 50 basis point. What exactly in terms of your business is playing out over here? And are you having to spend more to acquire the same growth? And is 22% then the new normal for Prudent?
No, I think we have been trying to maintain the same guidance from our side. Technically, we do not give the guidance, but we say that this is a very strong business where you have a very powerful mark-to-market element which is inbuilt into the AUM. And second, we have a very strong SIP book. So when I'm talking to you, we roughly are about 1,200 crore of SIP book against my equity of 1,25,000 crore. So that 10% annually we have the input from SIP. And if you assume 10% by way of mark to market, then it's a business of 18-20% of the volume growth or the AUM growth, and that should get translated as far as the profitability is concerned, because gradually the operating leverage will start playing out. If you look at the last month, I think there were a couple of one-off items. So we had the ESOP, which we have started providing for. We had acquired the the Indus, so that Indus acquisition has been now started amortizing as far as our amount which we have paid. So, but specifically, I think there are two one-off items. One was the ESOP which has started, and there was a change in the entire provisioning because of labor code change on the gratuity and the leave encasement. So that has played some amount of the margin compression, and probably this entire part of gratuity and labor code was one-off item.
Sanjay, I would have loved to push this conversation further, but unfortunately we're time bound, so I'm going to have to let you go, but we will call you in for a larger conversation.